Okay, I'm back on salmon. So I'm going to discuss one of our biggest investments in SIA. I have divided the thing in two. First, the market, because I think it's important to understand a little bit the salmon market. I'm talking about aquaculture and salmon farms, and then Lerøy seafood, which is the stock we chose. So this is us in Bergen, in Norway, this year, trying to see what is going on. It's a local market. You need to go there and understand what changes may happen. So you see these large cages, 200 meters diameter, and normally you have 200,000 fishes there, kind of salmons swimming in circles. So it's a very, very interesting industry. I'm going to go through it relatively fast. It's a good product. Basically, it is healthy. It has, well, omega-3 and some other ingredients that are kind of healthy, good taste, very digestible, and very convenient because you can do different ways to prepare it. So it's something that is overall a very, very interesting product. It is very efficient. So to sum up, the feed conversion ratio, it's how many kilos of feed does it need to produce 1 kilo of food, and it's 1.3, which compares very, very nice with chicken, with pigs, and with beef. So it's really efficient. Carbon footprint is the lowest. Water consumption is the lowest. In the end, you have an animal which has the temperature of the sea and is floating there. So the energy he needs, it's much lower than other animals, so very efficient food. It is a niche market. We like niche markets because you end up, if a niche market is a nice, small market, you end up in an oligopoly. And then it's small enough not to attract the big guys for competition, and this is what is going on here. The aquaculture, so the salmon farming, it's more or less now, this is an old chart, it's now I think 2.5, 2.6, 2.7 million tons per year, and beef is 72 million tons, pork is 122. So really, it's a small market. Strong demand. So you know that's from a practical perspective, demand has been growing 8% for the last decade. And then Kontali, which is a consultant, they did an analysis at a flat prices, growth is 6 to 8% per year. In Europe, we are the most salmon eaters. We eat a lot. Japan. US also, but US is half of Europe, and then emerging market, nobody really eats salmon, farmed salmon in the emerging market, so penetration is very low. So the potential of demand is huge. Limited supply, so huge demand and limited supply. Why? Because you need specific natural conditions. You need seawater, obviously, fjords, because they need calm waters. You need a specific current in order to take some of the waste. And you need a temperature between 8 and 14 degrees Celsius. And then you need industrial conditions because you need concentration. There's, biological risk, so the fish get sick. And you need concentration, you need regulation, and you need a supply chain which is verified, certified, and that works well. If you look at the geographies, you find if you bend the slide, you will see that all of the sites are in the same latitude. So you cannot go north or south because the temperature either is too low or too high, and then the salmon doesn't grow. So this limits the supply. So this is a typical site, 1, 2, 3, 4, 5, like 10 cages. You can do the multiplication, multiply by the 200,000 per cage. And then you need, calm waters, currents, and temperatures. And this is the risk. This is a nasty picture. It's sea lice. It's a crustaceous, I think. But you have jellyfish, you have pancreas disease, you have anemia, algae bloom, so there's plenty of virus and different things that can attack the salmon. And it's 200,000 fishes there. So if one gets the virus, the whole thing gets the virus, and you can really kill everyone. Actually, Chile has had 2 large crises in the past 10 years. This is a bit old, so maybe 15 years, where they lost the production for the country. So it's really very important that to have controls, sanitary control. So regulation has been implemented. The industry 30 years ago was new and has been evolving and standardizing and industrializing, and now it is industrialized. So they have a maximum allowed biomass in the sea. They have a license system in Norway and in Chile, and there is a traffic like growth model, by which if the biological conditions are good, you're allowed to grow. If biological conditions are bad and the fish is not in a good condition, you're not allowed to grow. And Chile has basically followed the Norwegian model. So limited supply growth, you can see what is the past. So this is a fact, past 10 years, 3% per year. Remember, demand growing 8%. And in the future, this is Kontali, the estimates are 2% growth. But I mean, you don't need to be really very, very insightful to see that this 2, 3, 4% is the maximum. And this is the reason Norway is 50% of the production, and it's fully, I mean, the capacity is full. They cannot put more. And Chile is 25% of the total production globally, which means 75% of the production globally is already in a mature level where growing production is going to be difficult. So high demand, limited supply, the adjustment will come via prices. And it's what we call a change of regime. If in your life of investor you find that change of regime is the best way to make money, it's a sector that changes structurally, and this is a good case. It used to be a cyclical sector when it was growing, so a lot of supply and new standards, blah, blah, and very cyclical, so more fish, lower prices, less fish, higher prices, but it changed when the capacity just peaked or matured, right? Average sector return on invested capital, 12%, at an equilibrium price in our numbers, which is now more 90 Norwegian kronas per kilo, around 8 euros. Risks, new forms of offshore. You can see here a kind of rig that has been remade in order to go offshore and withstand higher waves and try to, develop the business not in the fjords, but, offshore. It is not really working as expected. It's taking many, many years and not working well. And yeah, maybe one day it will work, but in our, visibility, 5 to 10 years, there's really not a lot of capacity coming there. And then what they call containment systems, so which is completely closed systems. This is not working either because both of them are more expensive, so you need higher prices, you have higher costs. There are models that will come when prices are high and then returns can be bigger. Risks too, onshore farming. This, in my opinion, not very ESG compliant, but you have big projects on land where they build huge swimming pools and they create the smolts there and they develop the whole value chain. CapEx much higher, costs also higher. You need to keep the water at this temperature, and then also there are risks because this is biology. Biology is not an algorithm, so you have issues, you have virus, and if you kill the whole production because you get a virus, the whole project's bankrupt. So there's a risk there that this kind of a startup risk, it will take time to bring also supply. Investment case, Lerøy Seafood. This is one of the leaders in Norway, 200,000 tons, 2025, market cap 2.3 billion, more or less, net debt 800 million, EBITDA margin, now it's depressed 15% more or less. They have 100 farms, and it's a tier 2. So there's 2 companies that are the top guys in terms of cost and returns, Mowi and SalMar. These guys are kind of top 2, but it's good business. They are vertically integrated, which is good. So they do from the egg to the smolt. Smolt is the small fishes. Then they grow in the sea, and then they do the processing, and they end up with even salmon, packaged salmon. So they do the whole chain because they want to, to get more direct contact with the end client. They've been investing in there for 10 years or more. Volume growth, no surprise. This is not a growth stock. It's going to be 3%, has been 3%, and nothing to comment here. In the past, there's a bit more growth because there's some pricing here, but in volume, so total revenues grew more, but volume, we shouldn't expect much more than this. There is huge cost inflation because of the feed. The feed is also based on sea products, kind of fish meal and fish oil. So there's some inflation. You see that inflation has been 7% for the past 15 years. They are coping with that, but in our view, cost will pass to the end consumer because the market structure is quite oligopolistic. This is a target for this year, lower costs, 205,000 tons, conversion rate. So, nothing very surprising. Strategy for them, they are building facilities of post-smolt. What they want to do is from 0 to 500 grams, they want to farm them onshore, because then you avoid a biological risk, keeping them onshore, and then they put the fish in the sea with 500 grams. Historically, the fish was put in the sea very early, but then you have higher risk, and then you have a higher inventory cycle. So more time in the sea, more risk. Now they're building facilities in order to grow the fish and then put it in the sea, and you lower the biological risk. It's called post-smolt. Second one is technologies. It's amazing how this industry, which looks like kind of very basic, they're investing in remote farming, they're investing in growth centers, they have even lasers to kill sea lice. So sea lice is a kind of a small animal, and they have lasers to kill them. So, and this is every year, it's surprising how they are improving. And the final strategy is the semi-contained system. So they don't want to put the egg system, which would be fully contained. It's a hybrid. So it's a platform that goes up and down, and the fish there, they can take it down 2 or 3 meters because the sea lice is more in the surface. And there's plenty of initiatives in order to avoid illnesses. Now, more or less 1/3 of the production is already in this type of semi-contained systems, and the plan is to have 70% in a couple of years and then 100% long term. And the reality is that the sea lice problems and biological issues are down a lot with these systems. Conclusion, it's nothing really surprising. It's a salmon farmer. Value chain developed over 20 years. Revenues grew a lot because of pricing and when the industry was growing, but now growth will be lower. Return on capital employed, 17% on average. And we think it's an attractive sector due to this, due to the consolidation and then the impossibility to grow supply. This is why the government put some extra taxes. Every time a good business reflects that in the numbers, normally in a commodity space more, the government gets there and puts some taxes. But this is not going to change anything because tax is going to be cost, and cost is going to be passed to the end consumer. Valuation, so it's a 4G. You know that we use the 4G, good business, good management, good balance sheet, net debt EBITDA, I think, is 1.5, something like this. P 2026, 9 times. We do a DCF, our intrinsic value is 80 NOx, now the stock is 44, and the IRR is 18%. So, but 2027 P of 8, and now the salmon prices are very depressed because this year has been very good in terms of temperatures, and everything has worked very well. And there's a lot of biomass in the sea, which means a lot of supply, prices depressed, stocks go down, spot prices go down, and stock prices go down, which means that Lerøy is in a perfect moment to buy it because it's cyclically depressed and structurally you have all the upside in the spot price, in the margins that on average should be more 25% EBITDA return. So, it's a heavy weight for us. I think that's it for me. Thank you.
That's gestartet.
Wow. Oh.
That was very fascinating. Learned a lot. One of the questions that I have, I saw an $80 intrinsic value estimate, and I think the stock price was in the low 40s today. Just, can you walk me through how you get to 80?
Sure. I mean, basically, what we call it 360, which is basically maybe what you do. So we always do a DCF, And the key for the DCF is stemming from Buffett when he says, or all the value school, they say intrinsic value. What we do is converge the model, right? So you look at the historical margins, historical returns, and then you build a model where, it's in the middle of the cycle.
Yeah.
Then, obviously, this is a commodity, so the main problem for a commodity is what is going to be the price of the salmon, the price of the commodity. Right. And then we have our theory where the equilibrium price is, which basically is the return, the return you need for new supply to come. So you calculate what is the return of the new supply, and you have the capex, you have the cost, and then you calculate what is the price that is going to incentivize more supply. And this is what we call equilibrium. And the price in the stock market or in the market is never there. It's always below or well above in the commodity space, like in oil and like in copper, etc. So basically, we use incentive price, we do our DCF, we take out an IRR and an intrinsic value. But I don't like to depend too much on one thing. So we do PE, EV, EBITDA, all the whole, we call it 360, and we call it also historical trading multiples and M&A. So, so you get a lot of different valuations, and basically common sense tells you, okay, this is the price. And we have 80. We've seen this at 80 already. Historically, the PE on normal times is 15 times, which I consider normal, so I wouldn't pay 25 times.
What's a normalized EPS?
So, big picture. EBITDA now is 16. I think on normal conditions should be 22, 23%. On the high end of the cycle, when the price will go to 120 Norwegian kroner, it's going to be 30%. This was the past. Yeah. Which means that basically easy 25% more EPS should be done on equilibrium prices.
Okay.
So if we take the PE, which is 9, and I raise prices, probably the PE is maybe 7. So this would more or less match the IRR, with 1 divided by 7, you're already 16%, plus a little bit of growth. So this makes sense. We always try to match all these calculations in order not to just depend on one thing and then you're wrong. Right. So, the EBIT margin should be complying with the return, should be complying with historical return, should be complying with everything. And in this case, one question, if you were the owner of this company, having the license to produce these tons of salmon, where you don't have competition, at what price would you sell the business? I wouldn't sell it, I would just keep it forever. So 15 times, we think it's good enough with some more EPS on normalized earnings.
And return of capital here has been primarily dividend, right? They're not buying back stock. They've been paying an above average dividend.
It's one of the negatives of this industry is that it's not really, the corporate governance is not the top.
Not the top,
So most of them are family companies, or some of them, this one is a family company. Sometimes they think long term, maybe too much. Maybe they do investments that they should be a bit more disciplined. So in these semi-contained things, maybe you should not test everything. So, but it's a family, and we think it's normal. Family companies, they invest very long term. They don't care that much about all the metrics we use in the financial market. So probably they could be more intelligent buying back shares like now, rather than investing in new things.
So that's a great point, because this is something we've done at Tweety a ton, is trying to convince companies that at certain points in time, you need to have flexibility in terms of capital allocation. When your stock is really cheap and you've got a good balance sheet, you don't need to borrow the money. Share repurchase makes all the sense in the world. There are other times when the stock's expensive, or maybe you don't have as much balance sheet flexibility that a dividend probably makes more sense. Have you ever tried to, maybe in a polite activism way, teach the company that, hey, they could actually create more shareholder value over the long term by, when the stock is cheap, pivoting to share repurchase, and when the stock's more expensive, paying a dividend?
Yeah, absolutely. Well, I've tried. I have suggested them, and the other guys, the other CEOs, I suggested them, why don't you stop growing that much why don't you just focus a little bit more on biology, on sanitary conditions, on really quality production? Don't try to go offshore. Don't try to set up new things to be the #1 in Norway. And they look at me like, this Spanish guy, I mean, what are you fucking saying? We want to be the leader.
Right.
So,
Right.
you know, it's a sector which is not really yet at the full speed in terms of financing targets. But it's very interesting because they will do it sooner or later. And in any case, the returns are good enough. So the risk has been taxes. So the government has just imposed higher taxes, and now there's new regulation. So this is another reason why the sector is a bit cheap, is because the government is analyzing the regulation. They want to reduce the biology risk, which is good. In the end, it's good for the big companies. It's going to probably harm the small players. So long term is going to be good. And we expect a professionalization of the sector in the next decade. But you know, I have nothing to say if the CEO says, no, I'm going to invest in these new technologies rather than buy back. Okay, you know, I understand, it's your call.
That's right, that's right. Awesome.
Thanks a lot.
Thank you very much.